Hello and welcome back to the channel Compliance Lookup. In today's video, we will discuss part 2 of Customer Identification Procedure and Risk Management. We will complete this video in 3 parts. We'll dive deeper into how these procedures are implemented, the tools used, and the real-world impact they have on businesses and individuals. If you found this video helpful, don't forget to like, share, and subscribe for more content on financial compliance, regulations, and more. Now the topic is Customer Risk Categorization. We will see in broad. A risk-based approach for AML and KYC. The risk-based approach RBA involves assessing each customer's potential risk of money laundering or terrorist financing based on their profile. Financial institutions categorize customers into high, medium, or low risk categories, applying appropriate due diligence based on the risk level. Example: a bank categorizes Raj, a local businessman with a steady financial history, as a low risk customer. Meanwhile, Ramesh, a politically exposed person who deals with international transactions, is categorized as high risk, requiring enhanced due diligence (ETT). B. Customer Risk Profile. A customer's risk profile is determined based on factors such as their occupation, geographic location, type of transactions, and relationship history with the institution. The higher their risks, the more scrutiny they face. Example: an individual working in a high risk industry like cash intensive businesses like casinos will have a different risk profile than a salaried employee with a stable job. The casino operator may undergo more regular transaction monitoring due to the higher risk of money laundering. Okay. C. Risk rating model or system. Financial institutions use a risk rating model to assign a score to each customer, determining their risk category. The model considers factors such as the customer's income, occupation, transaction patterns, and country of residence. Higher scores indicate higher risk, requiring stricter KYC procedures. Ravi, a middle class citizen with only local savings and minimal transactions, receives a low risk score. D. Determining risk rating. Risk ratings are determined by evaluating multiple factors such as the source of funds, country risk, and the nature of business or transactions. A weighted score is given to each factor, and the final rating, high, medium, or low, is assigned based on the overall score. Example: Ramesh, an importer who frequently deals with suppliers in high risk customer, is rated as a medium risk customer. The risk rating is based on his international transactions, source of income, and business profile. The bank reviews his account more frequently. E. Customer profile contents. A customer's profile contains key information like name, address, occupation, source of funds, and transactional history. It also includes risk factors, such as the nature of business and political exposure, that contribute to their risk categorization. Example: the profile for Priya, a salaried employee, includes her personal details, employer information, and monthly salary credit. Since her profile shows consistent transactions from a legitimate source, she is categorized as low risk customer. Now coming to next. Customer privacy aspects. Financial institutions must ensure customer privacy is protected during KYC processes. The data collected should be stored securely, used only for legitimate purposes, and comply with data protection regulations like GDPR. Customers should be informed about how their data will be handled. Example: Raj, a customer at ABC Bank, receives a privacy notice stating how his personal and financial data will be stored and used. So, Gembo, Soar, the bank uses secure systems to ensure his information is protected against unauthorized access. Now coming to next. Product risk categorization. Product risk categorization refers to assessing the risk of financial products offered by institutions. Different products carry varying levels of risk, and institutions categorize them to manage compliance accordingly. High risk products like cross border wire transfers require more due diligence than low risk products like basic savings accounts. Example: at XYZ Bank, a standard savings account is classified as a low risk product since it involves regular deposits and withdrawals with minimal money laundering potential. However, foreign exchange services and international wire transfers are considered high risk products and require enhanced monitoring for the AML compliances. Now coming to next, Delivery Channel Risk Categorisation. We will divide it into broad array. A. Modes of sourcing customers. Customer sourcing refers to how a financial institution or business acquires its customers. The risk levels associated with different sourcing methods can vary. For instance, first, face-to-face sourcing. In this bank, representative meets the customer in person, checks ID, and verifies other documents. This is considered a low-risk method because of direct interactions. Second is online sourcing, remote onboarding. In this, customer signs up via a website or app uploading documents. This method is higher risk because of the potential for identity theft or fraudulent applications. Example: a bank offering remote opening via its mobile app might have a higher risk of onboarding fraudulent customers who use fake IDs compared to customers visiting a branch in person. Next is mode of delivery of services. This refers to how services are provided to customers. Examples include: first, in-person delivery. In this, services delivered in a bank branch where an employee can verify and interact with the customer directly. Second, online or remote delivery. Services such as loans or insurance offered through online platforms which present higher risks due to less verification control. Example: a loan granted via an online portal with minimal verification steps like uploading a scanned document could carry higher risks compared to a loan provided after in-depth face-to-face consultation. So we have completed the part 2 of customer identification procedure and risk management. If you want to get update of this topic, then please press bell icon of this channel. Thank you so much for watching this video.